Welcome back to my channel, guys. First off, I wanted to get started by saying I'm really glad that some of you are enjoying my videos and actually watching them. I didn't expect that some people would actually be watching this, but that's really nice. And I hope you can gain some value from my videos. And even if you cannot get some value, I hope that you can learn from my mistakes because in that way you're also getting value. And that's what I'm trying to do. Anyways, today I'll be presenting you a company I've been holding it for quite a while, and it's also one of my bigger holdings in my portfolio. And yeah, I really like it. I've been studying it, trying to learn a lot about it. And today I'm gonna present you some material I found online. I think it's really, really good. I don't think I could have really done it better myself. And I want to show you so you can understand the company, Dino Polska, better. So, uh, getting started, so you can kind of see this company has been growing at ridiculous rates. So, revenue 5-year CAGR of 34%. The growth has rather been going faster than slower. The earnings per share are going up, being slowing down a little bit recently. The growth revenue has also had to do with very high food inflation in Poland. So maybe I should have said this is a Polish supermarket company. Um, so that's why it's also like supermarkets, especially with the high food price inflation recently. Their revenues are very tied up to that. So the margins, as you can see, they're all great for supermarkets, right? The return on equity, total assets, capital employed, invested capital, they're really amazing. Let's just like compare this. Even though I think personally, even though they're both supermarkets, Dino Polska and Walmart, they're not really comparable to their business model and also their like let's say economics and also the consumers they're trying to target as the Polish and the American consumer. They're really, really different, fundamentally different. But just as a comparison, so Polska has around 26 PE. This one has around 29.9, so 30 PE. And as you can see, the margins are not that great. The ROEs are not as great as the growth rates are way lower, and yeah, you have to pay up for this. But anyways, I'm gonna be oh stock price. Oh well, whatever, it doesn't matter. Yeah, so the stock price of Dino has really been successful. So now we're gonna jump in and I'm gonna present you why this is such a great performing stock, such a great company. So let's start off by looking at the Q1 presentation to get off my this let's say to start my thesis. So as you can see, Dino Polska, EBITDA sales, of course, with that those open stores growing, LFL sales. So like for like is like like for like it's like it's the amount of sales within the stores that are existing. So no, not new stores, not including the new stores. By how much those sales have increased. So the same store sales have increased 11.9% year over year. Here you can see their network expansion. So how many stores they have opened. Here you can see the regional coverage within Poland. So within the western part of Poland, they're quite dense, and within the eastern part, they have to yet expand densely. This is, of course, depends on the population density and like it depends how many people live in this kind of in these areas, but they still have, in my opinion, quite a lot of room to expand here in the east of Poland. Here you can see, they like solar panels, so they're energy independent. Also, of course, you can hit your ESG targets way easier with that. Here you can see the LFL sales growth. So it has kind of slowed down recently, but that is of course because the food inflation, as I said before, is fundamental to the sales growth of especially of such a grocer, which mainly sells those kind of typical food products, mainly food products. Here you can see the sales mix. So most of their products, their food, a lot of it. Yeah, and only 12.1%, so over 85% of their foods, of their products come from food related, from their sales come from food related products. But still, what I like here is even though their sales growth has slowed down a little bit, the food inflation has slowed way more, but their growth is still very good, very nice growth. Of course, high revenue growth, insane CAGR with the revenue, EBITDA growing, margin being quite stable, going down a little bit. This coincides with the raising minimal wage in Poland recently. Of course, people working in a supermarket usually earn something around the minimum wage. So yeah, that's gonna impact the cost of Dino. But I think over time that will flatten itself out, that effect, because I'll show you later that Dino can actually really influence their margins and have a lot of levers to use. CapEx, their what I really like is their capex, also their growth capex, is pretty much there's no debt to grow it. That's really nice. They're using mostly cash that's coming from the business. You can see here that they're very conservatively leveraged, very low leverage compared to the EBITDA 0.39. Like realty income has like what four times, 3 times, something like that. I mean, you can't compare it to a real estate company, but um, anyways, it has very low leverage. And here you can see the organic store rollout. So the opening there, it's just going up and up and up, opening more and more stores, which is very good. Um, maybe what is interesting, what I can show you next. Let's talk about the CEO of the company, Tomasz Biernacki. He's a Polish billionaire. And actually, what's very interesting, I like this picture especially. It fits him very well because you don't really know a lot about him. Yeah, introvert billionaire. Um, there's barely any kind of interviews, any kind of materials, news about him. His CV, if you search for it, it's like one page and it's just like 8 sentences. That's it. You can barely find out anything about him. I really had to dig and like search to find anything. So he comes from a family of business people. His parents used to do meat processing business. They had slaughterhouses, which also really helped him grow Dino, as Dino has a lot of in every store they have a fresh meat counter, and that helped them a lot with margins because he could, of course, utilize those the slaughterhouse in the, let's say, fresh meat infrastructure to his advantage when growing Dino Polska. So that's about Tomasz. He's a very influential figure. He used to own 100% of the company. The company used to be private, but in 2008, I think it was, private equity company. He needed a little bit more, let's say, capital to boost the growth of Dino because he saw a lot of opportunity and he needed more capital to boost it because, of course, he could have done it conservatively, but then Dino wouldn't be where it is today. So he raised money from private equity. Now he only owns around 51% of the shares, which is still a lot, but not as much as before, not 100%. The company, the private equity company, they made a lot of money in their return. I don't know what, I don't remember exactly what X it was, but like 3, 4, 5X, something like that. And yeah, he had to give up quite a bit of his shares, but with that, he could grow Dino a lot. I don't think he's gonna ever give up that many shares again. I think that was a one-time thing. I think I don't know if he regrets it. Who knows? I mean, you don't really hear anything from him, but I guess it was kind of a move he had to do back then. Yeah, so that's about Tomasz. Tomasz. The other influential figures in management, Isabella, she's the director of logistics, and then Michal, CFO, and Piotr, the director of control department. You should read up on them. Um, Most important thing, what I like, is they have been long serving with the company, and also they work their way up. Store manager, accountant, independent accountant, financial controller, now CFO, store manager, managerial functions, now director of control department, involved the development of business since 2002. Over the period 2002-2011, she held a number of positions in the admin, logistics, accounting areas. Worked her way up, director of logistics and warehouses. I really like to see stable management, working there for a long time, knowing the business, working their way up, getting their hands dirty in the smaller positions of the company. And yeah, of course, these guys, they're, I think, quite trustworthy, also with Tomasz. So that's about the management and the most, let's say, influential figures in the company. Now, here I found this Solar Peak Capital Partners presentation. It's a really good presentation. I'm gonna try jump through it. It's quite a bit of material, as you can see here, but it's really important. And if you understand this by heart, you kind of understand the whole business of Dino, at least 85% of it. As I said, Dino, founded by Tomasz in 1999, growing very fast, high margins, high return on equity, ROIC, so on and so forth. Um, yeah, so in recent years, smaller, more convenience store formats, such as Dino's, have been plundering market share from traditional mom and pop shops. Mom and pop shops. Me myself, I come somewhere from the eastern region. Um, in especially in the eastern parts of Europe, a lot of grocery shopping is still done in those small mom and pop shops. Um, they have a picture of a typical mom shops. Here you can see these. There they also sell fresh products like fruits, vegetables. They also have some different type of miscellaneous food products in there. Same as here, usually bread. Here you can see another mom and pop. So they're stealing a lot of market share from those guys. And what's also good about Dino, Dino is a so-called proximity retailer. Proximity retailer slash supermarket means it's very close to yourself, right? So you don't have to drive far. In Europe, people tend to like now going far, taking the bike, going off foot, compared to our American colleagues, which rather travel by car, especially because of their car-centric infrastructure. Um, Also about proximity stores, because 80% of Poland's population live outside of large cities in rural areas, suburban towns. Um, a lot of Dino stores, kind of like dollar store, I guess, um, are located in the proximity of the people living in those rural areas. So that means their next Lidl or Aldi will be quite far away compared to their Dino, which maybe they can even go on foot, take a bike, a few minutes, and then they'll be there. Maybe having to travel by car going to Aldi, right? So they'd rather go to Dino's, especially if they have all the food products they need. Another thing to understand the philosophy of Dino. So, right, Poland was a communist country until the fall of the Soviet Union. 80% of people live in Poland's rural areas. Well, during communism, people were kind of forced to live in rural areas, and they didn't really have the opportunity to move to the bigger urban cities, right? Because they were just blocked to do so. They weren't allowed because you need people to, especially do agricultural work in the countryside. So you weren't really able to move. You didn't have that freedom of movement most of the people in Western societies can enjoy nowadays. And also because I guess people who come from post-communist societies, they kind of used to enduring hardships, so they don't really like to. They don't have that much discretionary spending. Of course they do, but mm, especially when they're living people living in those rural areas who don't have that much money, who have kind of endured hardship in their or their life, they like to save up for hardship. So most of their spending goes towards those food-centric products, not those discretionary consumer products. Also, what helps, compared to what I said, like Poles don't really have that much discretionary spending compared to Americans, for example. Their pricing. So they compare the food inflation and also the prices of any other proximity stores in their area and adjust the pricing for the food, be it meat, milk, bread, whatsoever, and try to have the lowest pricing possible, right? Okay. as I said, 1990s, fall of communism, right? Maybe also interesting to know the Poland's economy is growing really fast, is doing really, really well. By 2030, it's set to overtake the economy of the UK, which is not doing so well. Here you can see population has grown quite nicely. GDP per capita also going up. Um, the people in urban and rural population. Um, yeah, you can kind of also see what I said about the rural and urban areas. So after the fall of communism, um, has increased quite a lot. This was also, of course, to the increase during communism in the urban areas, of course, the birth rate, so on and so forth. Vacancy, especially at the beginning of communism, many more people were living in the rural areas. So here you have it again: 40% of the people live in rural areas. 40.2% of the people live in small and medium-sized towns and in urban outskirts, where also Dino is very focused. All right. Here you have kind of the different type of grocers. One of their biggest competitor is Biedronka, owned by Geronimo Martins. They also have supermarkets in South America. And here they describe the grocery experience in Poland and what the different type of consumers, the rural and suburban, and also the inner city people like living in the center of the city enjoy. So the inner city format has low standardization, higher grocery prices, higher frequency of affluent non-staple food products. So exactly the opposite of what I explained before, right? So they like people living in the city, let's say they're a bit more sophisticated, be that negative or positive, but they need like something different. They don't mind paying up, and also they have more discretionary spending. While the people living in more rural areas and suburban areas, they're kind of used to seeing the same thing. They want to, save a buck or two, and also they're not bullshitting around. They just want staple grocery products, right? What they need, what something to put on the table and eat. They don't need all those nonsense stuff. Here you can also see the difference of how Biedronka can look depending on where it is located, more rural or inner city area. Um, Polish grocery market. So you can see the number of stores is going down, of course, because all those Biedronkas and especially Dino is stealing a lot of share from the mom and pops, and that's how it's that's why the number of stores is going down, but the number of sales is of course going up as the smaller stores are going, but there's like less bigger stores coming, so the sales are increasing. Mm. Yeah, over 60% of Polish customers usually shop in discount stores. Um, and what's also very good for Dino, as I said, because they don't have um, that many discretionary products. I'm sorry. 88% of Poles say they have go-to products, while only 12% of Poles decide at the shelves. So the Poles go in, they already know what they need. You grab it, for example, this beer here. They grab it, and then they don't really look around and shop around. That's why also Dino has a very, let's say, competitive advantage. They can just buy a certain product en masse, have a lot of cost saving on that, offer it at their stores, and it will just get sold like hot bread. Because the Polish consumer, as I said before, not supposed to be something negative, is rather non-sophisticated compared to the American one. So that's also very way easier for logistics and also has a kind of cost saving effect, in my opinion. The mom and pops market is still quite big, and so are peak capital partners. They believe the market will continue declining, which is of course good for bad for the small person. Um, And the large supermarket players have kind of noticed that they haven't really had success with like those big store formats with flashy, showing off a lot of products. And now they're kind of following Dino's model of having small, standardized store. Oh yeah, I should have mentioned that. So Dino, when they build out a store, they have a standard format. It's almost the same size between I think 3 to 500 square meter, and have a few parking lots. If it is somewhere where they have a lot, sometimes it might just be like a commercial space in a residential building. Um, have some solar panels on it. That's it. And literally in the every store built the same. It has the same layout. The fresh meat counter is at the same spot. The drinks are at the same spot. The bread is at the same spot. The, for example, cleaning products, which are non-food products, are at the same spot. Um, and because of the Polish consumer mentality, that is great and is a really, really efficient model. Um, one thing here also, the company building those stores is owned by Tomasz, and you might think like, oh, I don't really like that when the CEO gets so involved having a privately owned business building the stores and pretty much having a monopoly and a lot of leverage over the company. Um, there are many analysts that compare the building costs, and actually, it's a very competitive cost. You can go look in the annual report. They report how much they pay the company to build the stores, and I don't think personally that any company can do it cheaper than Tomasz company. Maybe he's bucking himself a few bucks, but as long as the numbers are correct, it's actually quite fine. But in those let's say founder operated companies, there's often a lot of things that are stinky. So this one is actually quite not so stinky. If you look, for example, at the ticker RISCK, RCI Hospitality, or GFL Environmental, they have a lot of shady business going on. Some kind of debts from family members to the company, or the cousin's company doing all the servicing and like maintenance for the clubs. Oh, it's so weird. But anyways, in this case with Dino, I don't think it's actually that bad, and I think it offers Dino actually a competitive advantage. Um, all right. So as I said, the players they're pivoting towards more smaller format. Yeah. Yeah. So Tomasz founded this at 26 years old. Very successful expansion. Um, $1 invested in Dino Polska in 2010 would be $70 today in 2022. This presentation is from May 2022. Nowadays it would be worth even more. As I said, store format 200 to 500 square meters. And it was okay here in 2010. It was he offered a 49% stake of Dino to the private PE firm, and in 2017 they exited the company. And yeah, they made quite a lot of profit. Here you can calculate this. And since then, there was no equity issuance because the company, which I really, really like, is growing organically, which organic growth is really, really great. And Dino is going after those 80% of the population living in rural and suburban areas. That's really an important metric in this whole thesis. You can see annual sales per store keep going up. Operating margins growing, going down here a little bit. Margins growing, gross margins growing, going down a little bit, but still tendency of going up to the right. Um, Dino owns all of its real estate plots and built structures for 100% of its new stores. As as I said in my co-part video, for example, it's really, really long-term, really good competitive advantage if you own in this type of businesses, which can be, let's say, real estate or land intensive. It's really, really good. It's going to benefit you a lot long term um, to own your real estate. It rents only 5%, and they are close to 100% standardized, each between 200 and 500 square meter in size. Um, have similar product categories and are arranged similarly, which the Polish consumer really likes, right? Um, Also, maybe this is important. Having the highest level of predictability of store performance among competitors maximizes efficiency, in our opinion, and allows Dino to focus more time on other matters. Exactly. Focus on building this and bringing in more money, and also building distribution centers, building out your slaughterhouse infrastructure. Dino also owns kind of oil, not trading company, like they manage all their fuel and any type of fuel they use for trucking and stuff. They also have a company for that, and also they're thinking. I have I have a quite little maybe prediction that they're thinking about also maybe opening gas stations. And also they just bought an online store for beauty and health products, which is very interesting. They're not putting their health products, beauty and health products in here. They're rather selling it online. So moving on to what I said again, the owning real estate is less expensive in the long term. So by year seven, the store is already printing cash, right? And it's gonna be printing more and more, and you're not gonna have your margins are gonna be way better because you don't have those a lot of increase of rent for inflation or kind of inflation linked contracts or whatever. Um, And what is also very impressive, Dino has never had to close any owned store since 2007. Why is it? Consistent performance across the standardized store base. So they have a model which works, and they keep just going at it, looking at what locations are best, buying the land, building the store, and it's just been working. They haven't had to close any store. So every store they have built, every year, it keeps increasing its sales, getting better and better margins, and printing more and more money for the equity owners, right? Which is what you want. Full assortment offering, of course, your staples. So here you can see the typical products of Dino. Very small amount are non-food products. Kind of very small amount of uh, units like products in general. I think Target has something like 40,000, 50,000, so 10x less than, for example, Target. What I also said before, so Dino compares the prices in the region, and Dinos are always the lowest priced, or in Thai for the lowest priced. It's their benchmark price policy, price benchmark policy. Um, and Dino is tends to offer regional brands and at equal or better prices compared to the private label brands like Nestle or whatever. Here you can see. What's interesting is Dino in those non-regional brands tends to sometimes be more expensive compare if you compare it to Nescafe, but with the regional products they always strive to be cheaper. Low, so they have the lowest price here. If you compare the price of the different type of staple products, bananas, milk, eggs, coffee, bread, sugar, so on and so forth. Um, you can see that comparing, for example, Auchan. So compared to Auchan, Dino is 38% cheaper. It tries like Lidl's kind of trying hard, but still, only with bread they're a bit cheaper. But compared to anything else, they're still either the same or cheaper. So Dino has really a lot of pricing power. Even bringing back home those high margins, you can really see. Here again is the fresh meat. So the Polish diet consists of a lot of meat. So it's very important to have fresh meat for the Polish consumer. Here again is what I said is Dino, 100% owner of vertical integrated meat processing plant, Agroryczna. And yeah, it was founded by Mr. Bernaki's family members. And it was Poland's one of the earliest Poland's private meat processing companies. So Bernacki had a lot of leverage owning that through his family. And a lot of their competitors do not have this fresh traditional meat counter, which the Polish consumer really enjoys eating because the diet consists of a lot of meat, and they'd rather spend money on meat instead of discretionary, uh, not necessary products. Here you can see the packaged meat in a Biedronka and also in the fresh meat in a Dino counter. Here you have again some numbers. So the store level economics. You can pause and take a look at this. It's quite impressive. So, but in general, you can see the revenue goes up, the margins improve over time, the operating margins as well. Of course, if the margin improve, the operating expense has to go down, right? Because they have the low pricing, so they operate more efficiently. That's how their margin is really going up very well. And also the maintenance is not that high, so you get especially in year 4 and 5, the ROIC starts getting very very impressive. All right. Low store catchment area of 2,500 inhabitants. So as I said, it's a proximity store. So they build a lot of stores, but catch only a few thousand people uh, with them, and bigger discount stores in more rural areas, they catch a bit more people. You can pause and read this slide. I recommend if you're going to invest in Dino, study this very well. I'm only jumping through it. Um, what else is important? Price. Yes, as I said, Polish consumer loves looking at price. Consumers worldwide here convenience. Everybody loves convenience and selection. Here, the Polish consumer is a bit different. Product has a full grocery selection and availability of fresh products. As I said, fresh products, fresh meat, important, and just the products they need is enough. And small selection of products is the other one of two most common reasons that discourage folks from shopping at a given grocery store. Dino does not carry that many different products, but enough to encourage the Polish consumer to shop at them. And here you see compared to other stores and also to Biedronka, that Dino takes off on the price, on the convenience, on the assortment selection, and also the fresh meat counter. All right. Here are some statistics on the shopping habits um, of the Polish people. Very interesting facts. For example, the different fridge size of American and European refrigerator. Like this guy's dug really deep. I really like this research. As I said before, the Europeans are more likely to go by a bike, foot or public transport instead of taking the car, like our American colleagues. Here you can see like they're going on Google Maps, studying the proximity of the store. It's really interesting. Um, they also talk about the opening times of the stores, also the density, and they calculate how long the consumer has to like takes to go there. And these are really some interesting facts, but I don't want to make another too long of a video. They're talking about the competition, and I really recommend you to take a look in this. They also talk about management. Here you can see the growth of Dino by region. So in the West, they expanded very fast. Now they're missing this. And as they grow, they're building more and more distribution centers. With more distribution centers, of course, you can get a better operating leverage, also increasing your ROIC and so on and so forth, right? Anyways, so the risks. Let's talk about the risk. As always, you need to, when looking at investments, think about the risk. Never forget the risk. Energy inflation. Yeah, kind of all over the world. But Dino has a very good strategy with their solar panels. So I really like that, especially when you think about the fresh beet counter and the refrigeration of that usually uses electricity. So it's good that they have solar panels on it, so they won't be as highly affected. And also they have their own oil or fuel company, which also has its kind of operational leverage if you don't have to deal with a third party with them, right? Food inflation. Um, They're quite good at holding up with food inflation. I don't really see them as much of a risk. Russia-Ukraine conflict. Yes, Poland is quite involved in this conflict. That might be a risk, which is not calculated. That's why, of course, the quite low PE, and also because Poland equities, they're not that sought after in the global markets. Increased competition. As you saw in some slides, they do have quite a lot of competition. Also, Biedronka said they expect lower EBITDA margins, which means they want to get a bit more competitive on pricing. So, yeah, there is quite a lot of competition, but I do believe in Dino and their management team that they can suppress competition quite well. Not suppress, win against competition. Operating cash flows will grow too large to continue fully reinvesting. Yes. Of course, then growth rate will slow, but probably they'll use that for buybacks or dividends, which also I wouldn't mind. But I'd like to keep this going for a few years. That would be nice, or even for endless. But as you saw, the growth, the amount, the stores here, they're quite becoming the density. That's what I was trying to say. The density is going. So when this is also quite red, they're gonna have to look for a different type of capital investments. Maybe they probably, I don't think they can grow that fast for so long. Negative symbol of the chairman and founder as a result of his billionaire status. Yes, I think that's also why maybe he stays very quiet. Maybe he learned a lot from his parents from the communist times, especially him being a millionaire. I do like that he's low key in a way. I would like to know more about him, but it's better than maybe having Elon Musk running Dino, right? Well, if I have a 50 PE, that would be cool, but still, I'd rather have Tomasz for now. Risk to international expansion. If Poland's government passes legislation to leave EU, right now they have a pro EU government, so that's not really a risk. Economic mobility amongst Poles withdraw them away from Dino stores and towards grocery stores or mobile assortments. Yes, that might be, but I think that will take quite a while. Chairman's ownership of both Dino and Krot Invest. Also, as I said, the construction company here. Um, as of right now, I don't think they have that much of conflict of interest, especially as this the Krot Invest, they're really building very cheap. You can read, of course, here the opinion of, so to speak. They're a bit smarter than me. Um, yes, Mr. Bernanke's unwillingness to speak to shareholders, but he's the biggest shareholder. I don't think he cares that much about the small shareholders that much because he cares about making money and making Dino bigger and making more cash flow for himself. And of course, with that goes the other shareholders, but in a way, I kind of like his mentality of just being quiet and making more Dino bigger company, better company day by day. Um, yeah, lack of CEO replacement and also the Shimon Pidu going in 2020. That's maybe one of the biggest risks out of all of these. Um, yeah, that's kind of the most like one that you really don't have a big, let's say, a positive outlook on, or any kind of good argument against it. That indeed is quite a risk. Yeah, so here you can read their conclusion: large growing market, attractive returns, also maybe international expansion, structural barriers to entry. I mean, all those competitors they can slow Dino down. Who else is gonna come? Like Lidl, Aldi, Kaufland, so on, Carrefour, all of them. They can really slow Dino. So who else is gonna slow them? Winning customer value proposition and convenience price, full assortment. What more do you want from Dino? They're killing it right now. Here again is the management team. Um, for exchange rate, yes, you do have some FX risk with the Swati against the dollar, depending especially on what money you invest in, right? If you use euros or excuse me, or dollars. Of course, here you have some foreign exchange risk. Excuse me, I'm having some allergy problems. Polish inflation, of course, you have to maybe think a little bit about the macroeconomics of Poland, but as long as the growth keeps going and the margins are good, it won't really impact that much. Interest rates go high because of inflation. Poland is doing the same as America, trying to control the inflation. Um, PE of the Warsaw Stock Exchange, and here they're also talking about the high gasoline prices calculated to the purchasing power parity. The gas is really expensive. So the gas is in Poland, it would be the equivalent of Americans paying 10.74 per gallon of gasoline. Yeah, I think that would be a civil war in America. And also here you can see the different type of stores and competitors Dino is facing. So, anyways, that's about it with my video. It's gotten quite long, unfortunately. I hope you enjoyed it. I'm gonna link this down in the description. I think it's a very, very good presentation, which I really, really encourage you to go through and study. I hope I could give you some information which was not in the presentation and also my thoughts on it. And I'm gonna close this one with a beautiful picture of a Dino store. And have a nice one. See you in the next one.